Good morning and welcome to today's edition of the London Session Open. Today is August 6, 2019, and my name is Alejandro Zambrano, Global Chief Market Strategist with ATFX. Welcome. Join me in the chat if you would like to. We have Tim here already. Good morning to you, sir. I hope you're having a good morning. So we're going to take a look at the markets. We're having a bit of risk appetite. Stock market's coming back a bit, and gold's coming off a bit, and even the pound dollar is actually doing rather good today, moving up a few pips here and looking to maybe regain that 122.50 level, and then you have as well the 123 level, which is really where I think people will start to sell again. So we'll begin, and we'll begin by taking a look at the charts. So let's begin with the pound, right? So this is the pound versus the USD. You can see here this is a 1 hour chart. You can usually see it up here what the chart is, and you can also just sort of look. You can see here sort of what we're looking at. So this is data from August here, and what you can see here is that the GBP just traded above the August 5th high, which is yesterday's high, and we've been consolidating here for a few days, and now the market sort of moved up a bit. It's probably going to go down again, but I think the way this is looking, it's probably going to try to drift higher, maybe to 122.50. I think that would make sense, because the market was in a free fall, went all the way down, right? Went all the way down to 121.17 on July 30th, and then the market moved upwards, and then since then it really hasn't really been able to do too much. And if you look at something like Euro versus the USD, it's up quite a bit, and you're having stabilization as well in the Aussie dollar and the New Zealand dollar. So I think this could potentially trade upwards a bit. I'm not scalping it or trading it myself. Rather, what I'm looking to do is potentially try to short sell around the 123 level. I don't have any limit orders or anything like that on there, but I think if you're looking from a bigger perspective, we should have some sort of reaction there. Because if you look, we're in that downtrend, and if we go up to 123, worst case 124, I think people will try to sell here. Stops are probably going to go 124.66, or maybe just about 125.23, which is this high here from July 24th. And what's the fuss all about? Well, let me explain. So this is the so what's going on in general, right? So this is the S&P 500 futures, and as you know, a few days ago we said that if we take out the low at 125, 129.57, the S&P would trade down, and it surely did trade down. It traded much aggressively lower than I thought it would do, and the market is almost reached that May 31st low, which is support, right? So the market swing to the downside and now is finding some support here. And what's interesting as well is that the market closed at the lows yesterday here at 128.19, and then in the late session, or the start of the late session, the market added to its losses, went even lower. So it traded down by about 0.7%, and now as the European markets are open, because you see what happened is it bounced upwards, so the Asians bought it and traded upside, and then when we here, because if we would have just closed like around the open here, it would still been like a reversal candle, but now sort of adding to its losses because people starting to realize, the idea was to short up there, and now we went all the way down here. So it's a good opportunity to book profits. And if you look online, I'm looking at people that were short, and also my own outlook would have suggested to buy back any short positions down here. So this is going upwards, and it could be rather violent. It's rather typical to have a violent sort of corrective moves. So I think we could potentially go up to, first fib would be very reasonable, but probably even higher. And then we would just need to see what's going to happen. My gut feeling tells me that we're probably going to go up 50%, if not 61.8. And then from these levels, probably try to trade lower. We may, of course, just go up and then down. And my preference would be if the market just goes up and sort of spends a few days here, I might take a long position aiming for the highs again. Because if you look at this, just forget about the headlines and everything for a few minutes, and just look at this. Isn't this an uptrend? Isn't this just a massive, funny looking head and shoulders type of market with double left, double right shoulders and a massive head, and just the line sort of going through here? That what it looks to me. But more importantly, you have this low here. So above that level, the trend is bullish. So there's really no point getting too aggressively bearish here. This market could easily find itself at a new yearly high. Not that I said it would be banking on that, but I think we can go upwards, right? So the two scenarios again, up and then down, and then maybe looking to buy here, and I think we will go up. And then the question is, we're going to repel from here, here, or here. And is this a good opportunity to short sell? I mean, depends on who you ask, right? But if you really want to short sell for another retest, I would probably, depends really. I'm sort of changing my mind right now, but I'm guessing near the 61.8% correction level, and I would be happy to be bearish below 29.58 because that's sort of the last level here. So I think maybe up a bit more and then down, but the reversal can already happen here. Now, if you look at something like the New Zealand dollar versus the USD as well, you're starting to see some reversal signs here as well. So this is the New Zealand dollar versus the USD. You can see we're stuck within that big triangle, and the unemployment figures from New Zealand overnight were better than expected. You're seeing a bit of reaction here as well, going upwards. So probably going to see the way this is looking. Yes, how can I forget? Dollar yen, guys. Take a look at this. This is the dollar yen. So this is the dollar yen, and the dollar yen had a massive spike overnight. So up into the sell zone. So again, we're having stabilization in stock markets, stabilization in the yen pairs, and even in the GBP USD. So that's sort of the flavor. That's sort of what's happening today. So if we take it from the top again, then, and sorry for sort of going in circles here, but again, GBP versus USD, it took out a high. I think it can drift upwards to 22.50. I'm sure there's some people buying here already, scalpers and people like that. But I think ultimately around 123 to 124, that's where people like myself, such as longer term traders and swing traders, will look to rebuild a bearish position. As for the euro versus the USD, the market here traded all above that trend funding level, and we're actually back here just trading sideways, back in that old range. And I think here is very difficult to say what's going to happen. I mean, we can clearly see and the price is creating lower and lower highs, so the market should really just be trading lower, I would argue. But the question is from where. So maybe up here, maybe up here. I don't really know actually, but so I wouldn't really pay too much attention to this market. As for the dollar versus the Japanese yen, so as you might remember yesterday, I said people probably gonna sell up here, and I think the sell entry was at 76. Now, if you shorted on the back of that idea, you should be up now by about 29-30 pip or so. But what I done here, I don't know if you can see this, I actually adjusted. So I pushed up that little buy area. So I would actually, it's up to you of course, but I would close out any profits here, because this market, when it becomes like this and stock markets go up and everything up, I think this is going to drift upwards. So I think this is going to retest the 107 level again. And I think maybe from 107 one can potentially contemplate shorting again. 106.90, 107 will stop just about high. But you need to understand that if stock markets go ballistic and they all sort of correct much higher, then the dollar yen could potentially reach something like 108 before stopping. But looking beyond that near term, I mean, if you just look at this daily chart, it's rather clear that we're dealing with a downtrend. And it's also very clear that those tariffs, unless some very quick deals happen, there's going to be a situation where those tariffs are going to kick in on by September 1st. And then probably not the September data, but data after that, October, November, is going to be bad. And we also have the latest move, which is obviously the US has branded China a currency manipulator. So things are going in the total wrong direction right now. It's really hard against hard, and we'll see what happens. I think there's a situation here where things can turn worse before it turns better. So I think if we're trading at 104.68 at one point, That would not surprise me at all. And I think people will, the longer term traders, people that sort of control this longer term trend, they are looking at 109.35, and they probably will be shorting across these various levels to ultimately see the price trade lower. So as for gold as well, we're seeing a bit of interesting price action. So you see here, you see stock markets declined yesterday after the close, as I mentioned. Personally, I think that was a little bit exaggerated. You have that very strong close and then it continues to go lower. I think there was just people in panic that sort of just had to close out positions because of margin calls and whatnot. As well, gold prices, they gapped higher. So the market closed here and then gapped up with $4.81, and then it tumbled. So if you look at the daily chart now, it might be a bit confusing because I have the colors other way around here. I have bullish that are bullish candles are blue and bearish candles are hollow. But this, if I would flip the color, this would be a reversal candle. This, to some extent, this is a bearish sign really, and it obviously coincides exactly with the low in the stock markets. So we'll see what happens, but my feeling here is that an analysis and sort of is that we're still gonna trade upwards, but I wouldn't be buying up here. Of course, it may go up, but rather we missed out on that initial, unless you bought the breakout, of course. But in my case, I didn't buy the breakout because the risk-reward ratio was not good that day. If I would have bought here, my stop loss would have been going down here, and I would be having, I think, at best 0.31, 0.93 times risk-reward ratio, so almost a 1-to-1, and that is obviously not good enough. Well, it's not good enough for me. I think it's not good enough for most people. But now, if the market would revisit that breakup point, and now, because I know that this is sort of the lows, we might potentially be able to get away with the stop loss down here. So if we revisit these levels around 1439, you can potentially get 2 times risk-reward ratio, if not a little bit more, if we reach that target. Of course, we can go upwards without actually going lower, but if one is not already involved, then I think we just need to wait for that pullback. Crude oil, I wouldn't envy any crude oil traders. Actually, it depends on how you look at it. If you're a clever crude oil trader, then you would have noticed that this market is trading sideways, and then you'd probably on the beach somewhere just enjoying the holidays. That's what I would have done, because there's nothing really happening in this market right now, and I think we'll continue to trade sideways for longer, and then we'll have a bullish breakout or a bearish breakout, but we're obviously not going anywhere anytime soon, and I wouldn't even trust these levels too much. What it really is important is these levels here. They're coming down like that, and then eventually they will be very, very tight, and the market is either going to break up or down, and that's when you have your breakout, and that's when it becomes interesting. German DAX, the German DAX, taking out that low, is rather bearish without a doubt. Pretty much back at levels we saw in February this year. So I think from the very low to the very high of the year, we have given back, or at one point given back 50% of the market or of its gains. Now, going forward, if the market, if your stock market bottom out and here we also bottom out, we can obviously head higher, which I think makes sense. But I think for now, the best way to treat this is to remain bearish. Obviously, in the short term, like today, it looks like it wants to squeeze this up a bit higher, maybe 50% correction. But I think around the 61.8% correction level, so at the 11,927.5, I think people might look to short sell again, and then they'll target these levels. Because let me show you. Just gonna open Paint here. So this is just Paint, okay? And so the market obviously gone down like that, sharp decline. Sometimes you'll have these V-shaped bounces in stock markets, but most trend require down and then consolidation and then break, a bit like GBP USD today. Alternatively, it requires up and then down and the break to this level, signaling the end. Because in a downtrend, as long as creating lower and lower highs, we're in a downtrend. So obviously what the market is trying to do now is that it's declined sharply, so it's going to try to go up, and at one point here it will try to create that lower high, so going upwards, but that's the last major high, and probably will have not major high but the last high, and then we're probably going to try to create a lower high somewhere here. I think that would be the most natural thing, and that's where we have the fibs. And it's the same thing with the S&P 500. The only thing though, it's sometimes with the market is a bit crazy like this, it might give you a V-shaped reversal, and if it goes up, it also goes aggressively up. This is not like trading forex where the market just goes up to the first fib, sometimes 50 fib, and then goes lower. This is more like well, stock markets, but they will correct a large part of the losses, which makes this interesting for both the long and bullish and bearish traders. The thing is this, if you didn't grab these already, then you'd probably be a bit of too late potentially. If you just look on Twitter, I saw a few guys yesterday, trying to buy, but they literally were putting on Twitter that they were getting in trouble here, because when you try to catch a falling knife like that, it's rather difficult. But you can, of course, if you take a look at this, in S&P, this is a major support level. Okay, so obviously when we start to reach major support levels, it makes more sense to potentially sort of go out there and stick your neck out and buy a bit. Okay, let's see if you guys have any questions. I think we covered most of what we wanted to cover. So we have Nikos here. Good morning to you, sir. Hope you're doing well and enjoying your time off. I might be taking some time off, but in September. Let's get a question. What caused the S&P 500 drop so low yesterday? Was it the dreaded Brexit or tensions with Trump? I think the number one reason for that, I don't remember exactly the timing, but I think yes. After the market closed yesterday, Donald Trump branded, or the US Treasury branded, the Chinese government as a currency manipulator. So in the past, during the Obama administration, and even before that, it's been sort of talked about that they were going to be branded, and I don't remember the full consequences of that, but it's sort of a bit shameful being called a currency manipulator. And I think there are some implications to that as well. I don't remember all the details, even though if we're reading the Financial Times this morning, and I think Goldman Sachs and some other people said that it's a toothless thing right now. But that was probably the reason why the market sold off, because we saw escalation instead of de-escalation in the markets. And the way this is looking right now, I don't really foresee any major changes. It's going to be interesting. I think next week or so, I'm going to meet the actual CEO of ATFX, and he's actually based. So we have a global CEO. That's the one that is coming, and then we have as well the local CEO, which is here in London. The interesting though with the global CEO is that he sits in Hong Kong, and obviously Hong Kong gives you access to, not access, but obviously you kind of know better what's going on over there than in mainland China, even though it's obviously not mainland China, but you talk with people and things like that. So it's going to be interesting. I'm going to quiz him a bit and see what he thinks the outlook is now going forward. Because it's interesting to see how, obviously, in how the situation is portrayed in the Chinese media, and as well how it's portrayed sort of internally, how they're trying to position themselves, to sort of see if they're looking to flinch. The way this is looking right now, the way I'm viewing it, is that Chinese government is not sort of falling in line with what Donald Trump wants to do. And there could be several reasons for that. Again, in the over there they have a specific sort of, like in US, you have presidential elections. You only sit for 4 years, and then re-election, and then I think you can sit for another 4 years. So back some 8 years in power, and then you're not, I think, allowed to apply for a third term, unless of course they would go and change that. I truly hope they don't, for the integrity of the democracy of the US and the rest of the world by that. So I think that they're working on those things, because at the same time, the Chinese economy, they have built up a massive wealth, and a lot of people don't tend to forget that. I mean, the Chinese government, I think they're one of the world's probably one of the biggest owner of U.S. Treasuries. So they sit on a lot of dollars and a lot of money, which maybe makes them better to weather the current situation, I suspect. But again, it's going to be interesting to see what he has to say. I'm going to quiz him and see what his business contacts are saying in the mainland. Okay, so we got a question here, or Marvin is here as well today. Good morning to you, sir. Guys, don't forget as well, if you have any, don't forget to like the video. Just click on it, and there's just a little button here. Don't forget to like that. And as well, if you want it to be added to my WhatsApp feed, then I'll give you my number now. Let's see, got a question here. To get the best entry on a trade, are the London or New York markets the best time to act? It really depends on your strategy. It really depends on your strategy. So if you're trading short term, like you're trading something like maybe GBP USD and sort of Forex, and you want to go with breakouts and stuff like that, well, usually the market sort of starts to move in the London Open, right? So if you would like to trade what we call the London Open breakout, which is when you have a break to the upside, like this one here, then obviously London is the best time. In the early morning, you plan your trades. But if you're looking for potentially some sort of a swing trade, and you're trading maybe on the daily chart, then I mean, I think end of the day, but early morning is the same almost. You can just sort of, for example, I'm not saying it's the best, but for example, maybe yesterday, I didn't want to trade yesterday, but when you saw the slide yesterday, by the end of the day, it's rather good as well. It's quite interesting from a swing trader, longer term trader trading on the daily chart. Sort of we start to move very close to major levels and things like that. It really depends, really. But yeah, end of day also works fine. What I do many times nowadays is that I look at the markets, and if there's any interesting situation, I would put entry orders on. I try to work with entry orders quite often and I try to put on the entry orders in the quiet time. So in the morning in London, I do that. Alternatively, late in the evening, say like 10, 11 p.m., when I sort of know what's going on in the markets, I put entry orders on when the market is not moving, because then you look at the market more objectively. Rather, if like now it's 10 o'clock almost, or like 11, or when New York opens, it's sort of all over the place, and that information overflow can make it difficult to think rationally about the markets, unless of course you have like a strategy, that applies around these hours. So yeah, it depends. As well, breakout traders, to give you an idea on that, like for example in gold. So in gold, for example, you have that very strong close right here on August 1st. So on that day, the market closed above these highs here and these highs here. So that could be something. Even here as well, you see that close here was good. So breakout traders and people looking to trade breakouts on the daily, they will sometimes use the daily as well to enter trades. Let me show you some other stuff here. For example, copper. So these are copper prices, right? Here actually would have been too late, but you see copper was supported at these levels, and you had that push here, and then you had the close was down here. So if you would have waited until close, it would have worked out. Rather, what would have been better here, which is actually what I did, is that I shorted actually on the pullback a little bit, and then I had an entry order to short sell when I look on the break here. So when the market finally moved down lower, I was already involved. So I shorted actually here around 262-ish, and then I had another entry to short sell here actually. and then from a daily time frame, that was when we clearly knew that the market was clearly bearish. And since then, I actually covered both positions now because I think copper prices could probably trade upwards a bit before going lower. I didn't have time actually to go through the Aussie rate decision, but as far as I understand it, they decided to not do anything, and the market did not really react too much to it. So the central bank, obviously in Australia, has been moving a bit ahead than the U.S. central bank. I wouldn't be able to give you a very good answer right now, Marvin. I would need to go through the statement myself and the economic data. So always when you start to see that inflation is deviating too much from its target, or the unemployment rate is deteriorating or improving, that's a good sign, so something's going to happen. And of course, you can look at what's happening in China and copper prices, all of that, to get an idea of what's going to happen before the data moves. That's people do that as well. But right now, I don't have a strong view on the Australian central bank. Okay, I think we're going to wrap things up. So guys, thanks so much for watching. If you do have any questions, feel free to reach out to me. And let me see if I have the link for you. Here we go. So I know most of you guys are on it already. If you're not, just click on that link and that will send a message to my WhatsApp. Save my phone number and I will save yours and I'll add it to the list, and I will be able to send you one message a day usually with that link to this video. So if you miss out on this presentation, you get that. Anyone that's already on the list, and then if you want to unsubscribe, very easily write stop. I'll receive the message and I'll remove you from the list. As well, if you have other questions about any of the premium services that we offer via InvestingCube or ATFX, you're most welcome to just ask me there, and anything else really related to the market. Okay, guys, thanks so much for watching. Don't forget to like the video, and I'll see you guys tomorrow, same time here at ATFX YouTube channel and investingcube.com. Thank you, and bye-bye.